Welcome to the Transparent FX Academy. I'm Nick and I'm a top potter on TradingView with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In today's video, I will be speaking about EURUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we must notice is that at the moment the market is testing a quite strong historical structure level. In fact, from here, all these previous rejections to the upside were created, in which every single time the market respected this area as support and rejected it to the upside. And we can see how just last month we had another test of this zone. The market, as usual, started rejecting that zone to the upside, and we could expect more potential bullish continuation away from this area. Dropping down on the weekly time frame, what do we have? Now, from a weekly perspective, what we can notice is that this market is currently approaching previous weekly resistance turn support. In fact, from here, these two previous rejections to the downside were created, confirming this area as quite strong supply and resistance. However, the market has now broken above the zone, and what we know is that in the market, if we have previous resistance and it gets broken to the upside, that previous resistance becomes support. So what we could expect here is a potential retest of this previous resistance turn support, and then for the market to reject it to the upside. We can also notice that since we have an impulse and the start of a correction, if we want to measure this correction after the impulse, we have to take our Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have a perfect 0.32 and 50% retracements currently lining up precisely with this previous resistance turn support, essentially creating confluence of support inside of this area, which means that there is a high probability of seeing more institutional longing inside of this zone. And we will see that later on when we go and see what we have when it comes to the order flow. Going down on the daily time frame, what do we have? Now, from a daily perspective, I did speak about EURUSD quite a few times in the past. I spoke about it when the market was here. I explained all the reasons for which we could expect this move to the upside, and that is exactly what the market gave us. Then from here, I made another breakdown explaining all the reasons for which we could expect the creation of a higher high. Then I explained why we could expect this impulse, correction, and continuation lower. And from here, I explained all the reasons for which we could expect this move higher. And again, that is exactly what the market gave us. And by the way, I will link in description these previous analysis so you can go and check them out for more free education. Now, here on the daily time frame, what we must notice is that as we have already seen on the weekly time frame, we have a very clear impulse to the upside followed by this correction. Now, in general, after an impulse, if you want to measure the correction, as we did previously, we have to take our Fibonacci from the low to the high of the impulse leg, and we can see how also here we have a 0.32 and 50% retracement lining up exactly with this previous daily resistance, which was acting as resistance all across this zone, getting rejected to the downside every time that now that the market has broken it to the upside is turned support here. And we can see how this area is essentially in perfect coincidence with the 0.32 and 50% zone that we have just identified. Now, this creates very strong confluence of support inside of this zone, inside of which we could see more institutional longing, further increasing the probabilities of seeing a potential reversal higher away from this zone. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data precisely for the euro, we can see how with the last report, we had a massive increase in net positions. We went from having 140k to 178k net positions, with institutions adding 40,000 longs with just the last report. So clearly, institutions are already starting to long inside of this area, and we could see more institutional longing inside of this confluence of support, at that point increasing the probabilities of seeing a potential rejection to the upside away from the area. So since institutions are clearly adding longs inside of this zone, how we could be approaching a potential move higher. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes from a directional perspective. However, when it comes to confirmations and entries, the best timeframes are the intraday timeframes, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point, we could be looking for a potential move higher for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll over here, past the testimonials, you will see that at the moment we have a massive special promotion in which you have a huge discount on the upfront price of the mentorship program from $497 all the way down to only $97 one-time payment. And as an option, since I have partnered with the forex broker Blueberry Markets, after you join the mentorship program, if you open an account with them, you can get a full refund credited back into your trading account. And if you scroll lower, you will see that at the moment there is still time to join before the offer expires and everything goes back to normal. And directly from here, there is the button to join in order to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. The link is also in the description and I will see you in it. If you enjoyed the video, make sure to smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. And I will see you in my next breakdown.